After an audit wraps up, you usually get a closing conference with the examiner. Then, within a few weeks, the IRS sends what everyone calls the 30-day letter. This is your first big act now moment. On the EA exam, they love asking what's in that packet and what the 30 days actually means. It's your window to agree or to request IRS appeals review. The 30-day letter isn't just a letter. It's a bundle. You'll see a notice explaining appeal rights, the revenue agent report, called the RAR, showing the proposed changes, an agreement or waiver form to sign if you accept, and Publication 5, which lays out appeal rights. If a question asks which item comes with it, think RAR plus Pub 5 plus an agreement form. That 30-day clock matters. The taxpayer has 30 days from the date of the notice to accept the changes or appeal them. Exam tip: don't confuse this with later deadlines like the 90-day notice of deficiency. Here, the key is simple. The IRS is offering appeals as the next step, but you have to respond within that 30-day window to get into that process cleanly. To get into appeals, you may file a protest. The exam likes the words formal versus informal. A formal protest is the more detailed written argument, facts, issues, and legal support, commonly used when required by IRS procedures. An informal protest is simpler, like a written request disputing the changes. Either way, timing is the same big idea. You're responding during that 30-day period. Representation at appeals is another favorite test area. An unenrolled tax return preparer cannot be the authorized representative before IRS appeals. They may attend as a witness, but they can't advocate as the taxpayer's representative. If you want someone to speak and negotiate for the taxpayer, you're thinking a recognized representative with proper authorization, typically via Form 2848. To let a practitioner handle appeals without the taxpayer present, you need a valid power of attorney. That's Form 2848. The representative also signs a practitioner declaration stating they're eligible to practice before the IRS. In real life, this is how an EA can submit the protest, schedule the appeals conference, and negotiate a settlement while the taxpayer stays home, because the IRS has the signed authorization on file. In which instance is a power of attorney required? Options include letting the IRS discuss return information with a fiduciary, advocating for a taxpayer during an IRS examination, providing information to the IRS at an employee's request, or authorizing disclosure of return information through written or oral consent. Think about what crosses the line into representation. Think about it. The correct answer is advocating for a taxpayer during an IRS examination. That's representation, so Form 2848 is required. A tempting wrong choice is authorizing disclosure of tax return information because it sounds official. But disclosure consent can be handled with other authorizations, like Form 8821, and it doesn't allow you to advocate or act as the taxpayer before the IRS. Which statement is not correct about changes to powers of attorney? Choices include: after substitution, only the new representative is recognized. A taxpayer must authorize a new representative when revoking a POA. A representative can delegate authority to another recognized representative if specifically authorized. Or a representative can withdraw from a matter where a POA was filed. Which one is wrong? Think about it. The incorrect statement is that a taxpayer must authorize a new representative when revoking a power of attorney. Revocation just ends the prior authorization. It doesn't force the taxpayer to appoint someone new. A tempting choice is the substitution statement, but substitution can remove prior reps, so only the newly recognized rep is treated as the representative.